Hello guys, my name is MBFX and welcome to my channel. In this video, I'm going to be talking about market structure, why market structure matters, break of structures, change of character, and overall we are going to do a practical example of market structure on the chart. So without any further ado, let's dive into the video. Now, what is market structure? Market structure simply means the move at which market moves. Like, the way waves are. The way market move is higher high, higher low, lower highs, and lower lows. Now, let me give you an example of what I'm talking about. Now, the way market structure is, market move in series of high, low, high, low, high, low, high, low. Create a series of higher highs. Let me write it down for you guys. We have this one as higher high, higher low, higher low, and we have it like that, higher high, higher low, higher high, higher lows. That is how market moves. If we are talking about trends, market moves in series of bullish. There are three types of trends in the market. We have the bullish trend, the bearish trend, and the consolidating market. We have two types of trend in the market. We have the bullish trend and the bearish trend. But the type of market we have the bullish market, the bearish market, and the consolidating market. But the type of market structure we actually have, we have higher highs, higher lows, higher high, higher lows, higher highs, higher lows. Now, this is for the bullish market. If market in a series of a buy trend, we call this the bullish trend or bullish market. Let me call it the bullish market. This is for the bullish market. If market is buying, that is when we call it bullish market. But if market is in a downtrend, let's say market is in a bearish trend, because if market is going down, like market is creating a series of lower highs and lower lows, it means market is in a bearish trend. Now, let me name it out for you guys again. We have this as lower high, lower high, lower high, lower low, lower high. We still have lower high, lower high, and we have lower lows. So this is for the bearish version of this. If market in a bullish trend, you see it creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. But in a bearish market goes in a series of lower highs, lower lows, lower high, lower lows. We call this a bearish market. call this a bearish market. If market is buying, market is moving up, we call it a bullish market. You will see market moving a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And if market is going in a bearish form, it means market is dropping, is going down. We call it bearish market, creating a series of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And we also have consolidating markets, whereby market is not move, market just consolidating. Like market is not moving a series of lower highs or lower lows. It's just there. We call this a consolidating market. Market is not moving at all. It's not moving either in a bullish trend or in a bearish trend. We call this a consolidating market. Now, we call this a consolidating market. If market is not creating series of higher highs, higher lows, it's not moving up or it is not moving down, we call this a consolidating market. Now, what did I say what market structure is? Market structure is like the movement of price. Whether price moves in a series of higher highs, higher lows, higher highs, higher lows, or lower highs, lower lows, lower highs, lower lows. These are the three type of markets. These are the three type of markets we have. We have the bullish market or bullish trend. We have the bearish market or bearish trend. And we have the consolidating market. Now, why market structure matters? Why the market structure matters? Market structure matters because if we are not able to identify either market is going up or is going down. We cannot, to identify market structure very well, we cannot know the market direction if we don't analyze the market, if we don't know the type of trend it is. Now, for example, let me repeat myself again. Market structure is the movement of the market. Why the market structure matters? Why the market structure matters? If we don't know the direction of the market, we will just be trading blindly. We don't know the direction of the market. And like I said before, we have only three type of markets. We have only three type of markets. We have the bullish market, the bearish market, and the consolidating market. Market structure matters a lot. It matters a lot because we will be able to spot whether market is buying or whether market is selling. We'll be able to know whether market is buying or market is selling. We'll be able to know the direction of the market. We'll be able to know the direction of the market, whether market is in a bullish trend or it's in a bearish trend, or whether market is in a bullish trend or it is in a bearish trend. If market is going down now, you will see market creating higher highs, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. But if market is buying, it is going up, you will see market creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now, market structure matters a lot. It matters a lot. Now, the third rule, we have break of structure. Now, what do I mean by break of structure? The way market, let's say market in a bullish trend now, it means market is going up. Market in a bullish direction is going up. You see markets creating series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now, what do we call a break of structure in a short and BOS? It means when markets break the previous high, the previous higher high. That is when we call it a break of structure. Let me just put as BOS, for example. BOS now is also now called break of structure. It means market is going bullish. In bullish trend, anytime market breaks a higher high, it is called a break of structure. Or in a bullish trend, break of structures, we also have again break of structures and break of structure. It means market is in a bullish trend. Market is just going up, it's going bullish. Now, in a bearish trend also, we have, it's still the same thing. We call it a break of structure also. When market breaks a previous lower low, it breaks a previous lower low, we call it a break of structure as well. Break of structure, when market breaks a previous lower low. For a bearish market, please don't get confused. This is for a bearish market now. For a bullish market, you will see market breaking higher highs, the previous high that market made. If market wants to go up, it will break the previous highs, the previous high market made, which is an higher high. It will break structure, retrace, break structure, with break structure, retrace, break structure again, creating a series of higher highs, higher highs, higher highs, higher highs. But if market in a downtrend, you see market break a lower low, which is break of structure, creating a series of lower highs, lower lows, lower high, lower lows. Break of structure means when market break the previous higher highs or lower low. Please don't get confused. Please don't get confused. We only use break of structure for a trending market. We only use break of structure for a trending market, because if market is not trending, it means market is consolidating. Like an example we have here, market is just consolidating. It is not going up, nor it is not going down. It is just there creating waves. You know how waves move? It will just be consolidating in one box. It will not move up, it will not move down. That is only when we cannot identify a break of structure, because market has not break this high. Let's assume that market break this high now, then we trace a little, then break again, then come back. It means market is going in a bullish direction. But in this type of market now, market is just consolidating. In a bullish market, anytime you see market breaks a previous higher high, it's called a break of structure. In a bearish market, anytime you see market break a lower low, it's called a break of structure as well. Now, change of character. What do I mean by change of character? Now, let me give you an example of what you can expect in the market. What change of character actually means. Now, change of character, it means when markets change the state of delivery. When markets change from a bullish trend to a bearish trend, or from a bearish trend to a bullish trend. Now, let's say the way we have it right now, this example right here, this example we have right here. Let me highlight it for you guys. Okay, right now, these two examples now, we are having market creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Instead of market to create a higher low, then break the previous high, what did market do? Market break this higher low. Market break this low. It means market change from a bullish direction. Breaking this higher low, it is a change of character. That is what we call a change of character. Some people just call it chalk. Sorry. Some people call it chalk. Anytime you see a trader placing break of structures and change of character, anytime you see a trader placing a break of structure at the previous high, it means market broke that higher high or break that lower low. But if you see a change of character, it means market change delivery from going up. Now market is going down presently. The way this example is, market was creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then all of a sudden, market break a higher low. It is called a change of character. It's called a change of character. This is with this kind of example now, we are seeing it that market is in a bullish trend, then market change to a bearish trend, creating a series of higher high, lower highs, lower low, lower highs, lower low, lower highs, lower highs, then lower low. Please give me a sec. Okay. Now, market was in a bullish trend before. Then all of a sudden, market break a previous higher low. It means from a bullish trend, market changed to a bearish trend. From a bullish trend, market changed into a bearish trend, creating a series of lower highs, lower lows, lower highs, lower lows. Now, that is what we call a change of character. In this scenario we are having right now, markets change from a bullish direction to a bearish direction. It's changed from a bullish trend to a bearish trend. Now, let's analyze this example too also. Let's analyze this example. We have right here now, we are having lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower high. Please give me a minute. Lower high, then lower. Having this one again. Lower high, then we have lower low. Now, what do we have here right now? We have that market is in a bearish trend, creating a series of lower highs, lower lows, lower high, lower low, lower high, lower low. Then all of a sudden, instead of creating a lower high, market created an higher high. Market did what? Market creates higher high. Higher high. Higher high. Then markets change from a bearish direction, from a bearish trend to a bullish trend. You know, before for this example, market was in a bullish trend. Then market, instead of creating a higher low, market created a lower low. Market created a lower low. It means in this example right here now, market was in a bullish trend. Then all of a sudden, instead of creating a higher low, market created a lower low. That is a change of character. Market moved from a bullish trend then to a bearish trend. But in this example right now, we have this as a change of character because market moved from a bearish trend to a bullish trend. Big players don't want to sell market again. They want to start buying the markets. They want to start buying. Markets now move from a lower high, lower low, lower high, lower low. Then all of a sudden, big traders, big banks, they step into the market. They don't want to be selling this asset again. They want to start buying. Then they broke the previous lower high, which is a change of character. They broke the high, then creates a lower high, then creates a higher low, higher low, higher low. Then they start creating a series of higher lows, higher highs, higher lows, higher high, higher lows. With these two type of example now, I hope I've been able to explain what a change of character is. With this example that I made here, market was in a bearish trend. Then big players, they step into the market. Instead of creating a lower high, they broke the lower high, making it a change of character. Then they start buying the market. Investors, they start buying the market. Then you see market creating a series of higher highs, higher lows, higher highs, higher lows. Then I think I'll be able to explain what a change of character is. I'll be able to explain what market structure is. We have three type of market structure. We have the bullish market structure, we have the bearish market structure, and we have the consolidating market. Why market structure matters? Market structure matters because investors will be able to identify the direction of the market, whether market is in a bullish trend, a bearish trend, or in a consolidating market. What is break of structure? Break of structure means either market breaks a previous higher high or lower lows. Change of character. Now, what is a change of character? What is change of character? Change of character simply means when markets change from a bullish trend to a bearish trend, and when markets change from a bearish trend to a bullish trend. Now, let's move to the last part now, practical example. Now, with this market structure, with this analysis you are seeing on my chart presently, these are the trades we took last week in my community. If you are interested in joining my community, there is a link in the description below, so you guys go and check it out. Now, as you see right now, we have with this kind of trend, market was in a bullish trend, high, low, high. Market was in a bearish trend, creating a series of lower highs, lower low, lower highs, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then all of a sudden, instead of creating a lower high, market break the previous lower high. Instead of creating a lower high, market broke the previous lower high, then making it a change of character. If you guys don't forget what I'm trying to tell you now, market change character right here. It means market was in a bearish trend, then all of a sudden market broke the previous. We have this as a break of structure. We have break of structure. BOS, break of structure BOS, and break of structure BOS. Then all of a sudden, instead of market to creating a series of instead of market to create a lower high, market change character. This is what we call the change of character here. Call it chalk. Market change from a bearish direction, then start going bullish. Then when market creates higher high, it's created a lower high, higher high, lower high, higher high, lower high, higher high, lower high. Then market starts breaking structure towards the upside. Break of structure, break of structure, break of structure, break of structure, change of character, break of structure, break of structure, break of structure. Now, this is practically what I've talked about today. We have, where is it? What is market structure? Why market structure really matters? Break of structure, change of character. Now, with this example I've given to you guys, you'll be able to spot whether market is in a bearish trend or in a bullish trend, or whether market change from a bearish trend to a bullish trend, or whether market change from a bullish trend to a bearish trend. With this example now, market change from a bearish trend to a bullish trend. Now, let me give you an example whereby market change from a bullish trend to a bearish trend. In this scenario right here now, market change from a bullish trend to a bearish trend. Market change character right here, bullish, break of structure, the market change character. It means market don't want to buy again, market wants to start selling. That is when market change from a bullish trend to a bearish trend. But right here, market change from a bearish trend to a bullish trend, then bullish trend to a bearish trend. I hope I'm able to give you guys a good understanding of what market structure is and why it matters a lot in the market. New traders, they get this confused a lot because there are a lot of videos right on YouTube giving newbies different explanation of what market structure is. But the way I explained to you guys today is very, very simple and straightforward. Because if you don't understand market structure, then there will be a lot of problems for you to analyze the market. You should be able to understand market structure very, very well. Market structure matters a lot. It is the foundation of any good strategy out there. In my next video, I'm going to be talking about what liquidity is and why it matters in the market. What liquidity is and why it matters in market. Both market structure and liquidity, they go together. They are like bread and butter, jam and jelly, whatever. They matters a lot. If you understand market structure and liquidity, there is a high chance you'll be a very, very profitable trader in less than a year. In the next video, I'm going to be talking about liquidity. But I'm going to drop a link in the description below, or a link at the top of the video right here showing you the type of liquidity we have in the market. So I think with all what I've said now, I'll be able to explain what market structure is and change of character. So I think that will be all for now. If you guys have any questions, I'll be in the comments below answering your questions. And if you are interested in joining my community. The link will be in the description below. And I think that will be all for now. See you in the next